In today's video, I'm going to show you a simple and repeatable way to trade reversals with precision. I know a lot of traders struggle to find the turning points in the market, so today I'll give you some simple rules that you can follow. And of course, I'll share the knowledge and experience I have trading reversal setups. So let's get into today's video. I'm going to answer all the questions that you can see on screen in today's video so you have a well-rounded understanding of reversals. So firstly, what is a reversal? And everyone is going to have their version of understanding of a momentum shift, which is a reversal in price. I'm going to show you mine. I know someone is going to say in the comments, this is a break of structure, this is a change of character.
Shut up, bitch!
My understanding is backed with the logic of how the banks move the price. So on screen right now, you can see the variations of reversal structure. When price is bullish, we're making a series of higher highs and higher lows in the market, right? We get that low, high, higher low, higher high, higher low, and obviously higher high in the market here. Price gets into a higher time frame mitigation and we see a momentum shift. This is the first sign of price changing its direction, which is exactly what we would want to see at a higher time frame mitigation. And it's important to note that the momentum shift and the structure break, which is down here, are two different things. A structure break shows the bank's footprint, it shows intention, it shows the start of a new trend or the start of an initiation in the market. A momentum shift shows a change in order flow or a start of a sideways range. And this is why it's important to play these setups at good locations, which is what we'll go into later in the video. What we see when price creates a momentum shift, which we'll go on to these two variations in a second, is price creating a new bank order in the market. Remember, they have to create manipulation, which is price running above a high or below a low. That's how they initiate their positions, because they have to buy before they sell in the market, right? So then the orders are left open. When they come back into that point of mitigation, which is that buy to sell, they mitigate out the orders, price reacts, and that's how we see that continuation to the downside. Now, when they don't react out of it straight away, they run above the high and we get that buy to sell. This is now left for the future, for a future mitigation point, for a future place that we can look to trade from when price comes back into that point of mitigation. And this is where we can look for this same setup so that we can look to get involved in price, or we can play it as a reaction with our stop above the high here. So these two variations that we can see on screen right now, these are the zoomed in versions of what we see at higher time frame mitigations at good locations. We've got this one, which is number one, this one, which is number two here. So these are two different variations. This is a fractal high creation in the market, which a fractal high is a higher time frame high creation in the market. Now, we'd want to see that at a point of mitigation, because if this is a higher time frame range initiation that price is reacting from, this is the 1 minute price delivery as price is coming back into that 15-minute range. And now we're seeing a fractal high creation, which is a higher time frame high creation on the 1 minute chart at a point of mitigation. We can anticipate that this is that next phase of price coming into the market, which is that continuation phase of price. So when price gets back up into this location, we can either trade this as the momentum shift, or like I've got here, this could also signal a break of structure. So we could get a momentum shift, a structure break, then you could play that pullback and continuation to the downside. Then we have variation 2 here, which is that strong high creation. Now, quite a lot of you guys that have watched the videos would have heard me say strong rejection of higher prices or strong rejection of lower prices. And this is what I'm talking about, right? Price is creating that momentum shift in the market, but it's not coming back here to see that continuation to the downside. So what they're creating is that move up into the point of mitigation, which we see here on the left, strong rejection of higher prices because prices moved up and moved right back down. And now we've seen that initiation to the downside. And what that does is that transfers all the sell orders that were in this sideways range into this whole buy to sell order here in the market. So that when price comes back in the future, like I said, we can either trade this here, or we can look for that momentum shift again, and then we can play that as that continuation there to the downside. So there's many ways that you can look to get involved in this move, but it's understanding two different variations of a higher time frame high creation. And this is what momentum shifts are. This is what strong rejections of higher prices or lower prices are. They're creation of higher time frame highs and lows at points of mitigation where we would anticipate those to be created. So a lot of you guys might be thinking, what's a strong rejection? Well, strong rejection is also the same as a strong high and a strong low. And when NJAT was born 4 years ago, a lot of the mentors out there now had learned from us and taken the concepts out there with no real deep understandings. So you may have heard a strong high or strong low mentioned before, but that's it. Never a reason why or an understanding of its creation, what it means in price, where to look for it until today. So what I'm showing you is the why. You can see a lot of the concepts that we use can be understood in many different ways. A momentum shift can look a few different ways, and the variations of the momentum shift means something different. This is why we always preach about understanding every market move, because this is how detailed it gets. A simple momentum shift variation can give you a clue of how price will react in this location in the future. This location can give you an understanding of the next higher time frame move. It can be used to enter the market, spot the next market phase, and the deeper your understanding by following the why, the better trader that you can become. Quick shout out to the NJAT community. It's incredible how much growth these traders are getting just by putting in the work with the correct concepts that are the facts of the market. And now these are traders that are becoming consistent, making 10% gains on a single trade. So these two variations both mean something different in the market. These are both fractal highs in the market as well, but one is a creation of a new OB for the future, which is the variation 2, and one is a full mitigation of this sideways range here and a fractal high, and then a continuation to the downside, which both show the next move in price, right? Because we've got sideways range, which is where the orders are created, initiation, when price comes back up into that sideways range, this is exactly where we want to look for that momentum shift to happen, which is a variation of number 1 or number 2. And that signals that next phase of price, which is that continuation phase. And the initiation and the continuation phase, these are the ones that we want to be getting involved in, because these are the higher time frame, larger moves. And that's how you can hit those 1 to 10 risk to rewards very quickly, because you're entering on the 1 minute chart by reading the price delivery at the higher time frame mitigation, and then you're anticipating that next higher time frame move, which could be that 20, 30, 40, 50, 60 pip move. So when you're entering into the trade with 2 to 3 pip stop losses, that's how you can get involved in those trades that hit take profit very quickly. And this is the same for the opposite side. This is the bullish representation of the momentum shift. The banks are just transferring out from selling order flow or selling momentum into bullish order flow or bullish momentum. And that's what moves price higher and lower. So we need to understand the location that we're seeing the momentum shift. We need to understand the variations of the momentum shift and the higher time frame direction, which is just going to be about zooming out to a higher time frame, finding the range and initiation, and understanding where price is coming back into inside that sideways range. So then you can look for that continuation phase of price. So where would you look to trade these? Notice these examples are happening at higher time frame mitigations. That's a key part to picking the correct mitigation. We're not just trading these any old place. Trading location is key to trading this, so you're not just being tapped in and tapped out. When you do see reversal structures at higher time frame mitigation, it does show those fractal highs and lows printed. And like I said before, a fractal high and low is a higher time frame high and low creation. So if we see a 15-minute fractal being created, that could be a 4-hour high and low being created, and so on and so on. This is also a massive confluence to a trade as well, because if you're seeing a fractal high or low printed at a higher time frame mitigation and you're getting involved in this trade, this is how you build those very high probability logical trading setups backed with the facts of how price has to create fractal highs and lows. So let's have a look now at what this looks like on the 1 minute chart. Just one more thing before we get into the charts as well. When we get into a point of mitigation, for example, and we see that mitigation here and we see that momentum shift in price, if you're looking to play that as a pullback continuation and price moves back and runs the high and takes you out, for example, this is a sideways range being created at a higher time frame mitigation. So it's very likely after that you'll see that next move in price, and then that's where you can play that as a continuation. That's a key rule to write down, is that when it's not a reversal, it's a range being created. So let's just get into the charts now. So we're going to start here on the 15-minute chart, and then we're eventually going to get down to the 1 minute chart so you can see this variation. But this happens on every single time frame. When we get momentum shifts that happen in price, they're either going to be strong rejections of higher or lower prices. They're going to show their intention. Price is going to come back here in the future and leave an order block for the future, or we're going to mitigate out that order block now and see that intention created. So as we can see here, this is that whole momentum shift happening. We see price runs above the high, we initiate, and we don't get that pullback straight away, right? So what does that create? That creates a buy to sell order block in the market. So when price comes back here in the future, we know that this is a potential place that we can look to trade from if this happens during the sessions. The same here, right? We get this whole sell to buy created in the market. which is that whole sell to buy order block, which is that momentum shift in price. Price creates the high, the low, we initiate. So we're creating that momentum shift, the one that creates the higher time frame order block, and we don't come back, right? So this is left for the future. So when we come back here in the future, this can be traded out from following the intention. And as we see here again, we got that whole buy to sell. So this would have been a first trading location. When price comes back into this point of mitigation here as well, obviously we're thinking about locations. We apply on our location concept. We're at sell high locations. We get the mitigation. We do get the lower time frame momentum shift and strong rejection of higher prices here as well. So think about this, price is creating a high, a low. We run the high, which is that start of that momentum shift in price as well. So where's the next low that price is going to target if this is a higher time frame momentum shift? It's here, it's at this low here. So now we can trade alongside that intention on the lower time frame if we're getting continuations down into that low here. So let's have a look at that now. So we do have structure being created, high, low, lower high, and lower low in the market. So this would have been a great opportunity to look for that continuation here. When we've got this A to B for a sell high continuation, we have direction because we know that price is creating that momentum shift down into that low. And this is that whole buy to sell that created this low. So if price reacts and follows through, we know that we have a target to the downside here for liquidity. Now it's all about making sure that there's a setup in the session at a good location and looking for that momentum shift at that previous high. So let's do that now. So we're now down here on the 1 minute chart. And like I said, when price creates that momentum shift, which is that strong rejection of higher prices, we run above the high, which is that manipulation. So we get that whole buy to sell in the market, which I'll just draw on for you. That whole buy before the sell printed in the market here. So when price comes back into this point of mitigation in the future, this can now be traded as a point of mitigation. As long as it's at a sell high location, this is what we want to be looking for, because price creates buy to sells all over the place in the market. But it's the ones at the good locations that we want to look for. So when we get back into these locations in the future, which you can see here, this is a representation of that momentum shift here in the market, run above the high, initiate, we don't get the pullback and continuation. So that is left for the future as a future mitigation or a point of location that we would want to trade from. So I'll draw that on now. So we've got that whole buy to sell printed in the market here. So when price comes back into this point of mitigation in the future, during the session, this is where you want to look for that momentum shift in price. And then you can trade this to the downside because you have the intention. This buy to sell created this low here. That gives you your price range. When price pulls back into that point of mitigation, you look for the momentum shift here again, which is that higher time frame high creation at that higher time frame mitigation, which is that 15-minute range, which is this whole sideways range here. This is where we look for buy to sell orders to be created inside a sideways range. We then get that initiation to the downside. When price comes back in, this is your trading opportunity to get involved in that continuation. And like I said, all we're looking for is this variation here, because this shows a higher time frame high creation and a fractal high at a previous mitigation, which is a new higher time frame high created. And like I said, then we're looking for that continuation phase in price, which is that more aggressive phase. So as we can see here as well, price moved up into this location here during the session. We got the high, the low. We took out the high, which is this high here. So we took out the liquidity, momentum shifted here to the downside. We got that pullback and continuation to the downside. So this would have been an opportunity to get involved in a trade short. Stop would have been above the high. You could have got a 2.5 pip stop. And of course, we always go for those 1 to 10 risks to rewards. And you can see that this variation of the momentum shift then created that trading opportunity here in the future. So this is a setup that you can have, right? This is a setup that I have. This is a setup that I use. This is how I view the market to create high probability setups. I'm thinking about trading location. I'm thinking about fractal highs being created at previous OBs at good locations that are left unmitigated, that have created that strong rejection of higher prices in the market, which is that strong high, and created that A to B. So I know I have a very clear target, which is down at this low, to play that as a continuation. So as long as I've got a fractal high printed here, I can look to get involved in that continuation to the downside. Logical, repeatable, and consistent. And that's what you always want to look for with your trading system so that you can just focus on flawless execution in the moment. So let's have a look at a few more examples. So as we can see here, we got a sideways range here, followed by initiation to the downside. That is sideways range, initiation. So when price comes back into that sideways range, this is where we want to look for those buy to sell orders, where we want to look for those fractal highs to be created in the market. to potentially play that continuation there to the downside. So we have our narrative, we have our understanding of price. We know where to look because we're looking in that sell high location. We can already see there's an FU wick here, which is a representation of that buy to sell in the market. Price delivery, which is that momentum shift that creates that future OB in the market. So we know exactly where we're looking for straight away, just using the concepts. So now let's go down onto the 1 minute time frame and look at what price is printing. Okay, so down here on the 1 minute chart, now this is that point of mitigation. This is that sideways range that we were just looking at. I've drawn it in yellow so that you guys can see the sideways range. Inside the sideways range is where the order blocks are created. So this is where you want to be looking for that point of mitigation. Now, every time price comes back into this point of mitigation, this is your opportunity to play that fractal high or low creation or the strong high or low creation. Remember, this is what I want to be looking for. Price to create a high, run above a high, break the low to show that momentum shift, pullback and continuation. Now I can enter this trade here with my stop above the high in a safe location because I'm playing that higher time frame high creation at that point of mitigation. Now, every time price comes back into this point of mitigation here, 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 and here, we see the same price delivery, right? So this is your opportunities to get involved in those moves. So let's go through each of those. So here we can see price moves up into this location. We get a high, we get a low, we get a higher high. So we run the high, we initiate to the downside because of momentum shift, pullback and continuation. And that creates that higher time frame high creation at that point of mitigation. Now that doesn't go on and run 50, 60, 70 pips. The reaction just starts to pull back into this sideways range that we have here that initiated and broke structure. And that carries on its intention of higher prices. And we eventually take out this high for that continuation. And as we can see, price does also create a fractal low at this point of mitigation, which again is that higher time frame low. So we create a low, a high, we run the low here, and then we initiate to the upside. And what does that do? That creates that future OB. So price has to react out of this place in the future. If we move the price to the right as well, we can see that that sell to buy that was left unmitigated is what reacts when we get down into that point of mitigation in the future. And that carries on that intention of higher prices. And what does price do? Creates another fractal low in the market here. We run the high, we get that pullback and that continuation to the upside. So fractal highs and lows, it's very important to understand them, and it's very important to understand the variations because then you can look to get involved in trades at good locations and you can understand how price creates higher time frame highs and lows in the market. So as we see here, price moves into this point of mitigation. We do create that fractal high here. When we get into that mitigation, we break the low that we see here. But as we can see, price run back above that high. And what did I say that creates? That then creates a larger sideways range. So we know that if we aren't going to get that fractal high printed or that strong high printed, we're going to get a sideways range, and then price is going to run the highs and lows of the sideways range and create those orders in the market and create that fractal high eventually. So we see here, we get that high, low, run above the high. This wick breaks the low here on a lower time frame. And then we get that pullback continuation, which is this fractal high here when you start to train your eyes to see this. Again, price doesn't run onto that 40, 50 pips, but we're at that point of mitigation where we're at a good location to trade from. And that's just the probabilities playing out. And we can see again the same variation of this here in the future. And this is the one that does run on to that 1 to 10 TP. Thank you all for watching. If you want to find out more about how we trade these markets with precision, you can visit our website at notjusttotrade.com. You can also find us on Instagram at notjusttotrade. Please leave us a like and comment if you did enjoy the video, and we'll catch you guys on the next one.
And she been calling me daddy lately, want me to put her in Cartier's, and the deserve it. Put in work for the money, she earn it. Give me top every night, lip service. Now I gotta block these, she worth it. I'm out.